Hey guys, John Polemy here, Actionable Intelligence. Today's Saturday, September 5th, 2020. I did the recent interview with Dr. Michael Kelly, and we talked about the move to the electrification of the United Kingdom, specifically, as a result of the initiatives of the government in the UK to meet the 2050 zero carbon rules. And as I was thinking about the paper that Dr. Kelly wrote and then the interview, one of the things I haven't touched on in a while is copper. And without getting into another debate on global warming and all that stuff, we've talked about that before. We don't care one way or another. What we care about is electrification. If it happens, if governments are going to push it, what does that mean for various material sectors that we're invested in or we can speculate in? And so one of the things I wanted to point out here was a recent chart of copper. And you can see that copper has been trading off and on above $3 a pound. Why? Well, in the short term, the reason why mostly is because of the supply of copper is falling because of mine closures due to COVID faster than demand is falling. Now, demand has pulled back in some areas, well, massively after the initial lockdowns, but it has come back in the main consumer of copper, which is China. So let me just a couple quotes here. Jonathan Barnes, associate consultant for copper at the London-based metals and minerals research firm, says while effects of COVID-19 could decrease world consumption of the metal by 3 to 4% this year, the drop in mined output and scrap flows has been greater. Globally, total visible stocks, which include those on exchanges and bonded warehouses in China, fell 40% from March through July to below 600,000 tons. LME, which is the London Metals Exchange, warehouse inventories are at 13-year lows. The copper price will likely rise further towards the end of 2020, Barnes says, and the current environment has strong parallels to the rebound in the copper price after the global financial crisis. So one of the things we had talked about when we had talked about copper way back when, probably 6 months ago, was the fact that in the long term, the supply of copper is going to get tighter. Why? Because the easy copper has been found. And it's the same story that exists in many other resource and mineral subsets. Not sufficient investment has went into finding new reserves. Why? Because the price has been low enough to not incentivize people to go out and look for new copper mines. And we've seen head grades in these mines continue to go down over time. Obviously, copper being used in electrification, used in transformers, wiring, all these different things, electrical components, electric motors. And now with the renewable energy push and the initiatives specifically in the West to push for, a carbon neutral future, and the goal being 2050. And I wanted to point out this last slide here, just this one factoid here at the bottom bullet point. This is from Dr. Michael Kelly's paper, Electrifying the UK and the Want of Engineering. It's the guy I just interviewed the other day. And basically, I just took this data from there. It said if the UK replaced its combustion engine car fleet with EVs, it would need 2.6 million tons of copper. That's more than half the world's production in 2018. So that's just in the UK. And he kind of talked about that in the lecture or in the interview that I did with him, that, extrapolating that across the entire world would cause a tremendous amount of demand. You can do the same exercise when you talk about wind turbines, solar panels, the whole shebang. The other thing that we talked about and isn't thought about is that, if you're living on a street, the electric utility that does the distribution of electricity has sized the wiring, the distribution system, the power delivery system has been sized for the average use of a home or that street. And so there's a lot of discussion about, well, will during the day when the sun's shining and the wind's blowing, we'll charge these batteries, and then we'll discharge them into the grid, and then people can charge their cars up, or some other different arguments. The problem is that if everybody goes to electric, and if we go to electric heating and get rid of natural gas and all these other things they're talking about doing, the entire electrical grid is not set up for that. It will have to be rebuilt. Transformers will have to be increased. Distribution systems, substations will have to be redone. These are tremendous consumers of copper. So, again, not to get into an argument, not to get into a discussion about whether I want it to happen or it's a good idea. We already talked about several weeks ago, the EU is doing a $500 billion stimulus package that's going to be focused on green energy. So this stuff is going to happen. It's happening. And so, another reason why the copper price is moving above $3 a pound recently is that China's vacuuming up the copper supply. This is from another article. London Metal Exchange warehouses on Tuesday reported their lowest copper stock level since 2005, just 88,000 tons. That is not even equivalent to 1 week's consumption in China, let alone for the global market overall. Stock levels at the LME have fallen 14 trading days in a row. So I'm not suggesting it's just going to keep going up. What I am suggesting, though, is this fourth bullet point is that the official China Manufacturing Purchasing Managers Index, which is a leading indicator. What is the Purchasing Managers Index? It's an index that measures purchasing managers if they are buying items. Like if you have to manufacture a vehicle or some type of machinery, purchasing managers have to go out and buy metals, they have to go buy supplies, whatever. This index measures that. So it's a leading indicator of economic activity, whereas GDP is a lagging indicator. So I like to look at the PMI, and there's been studies done that, just to refresh your memory or educate you in case you didn't know, a reading on the PMI above 50 indicates economic growth. A reading below 50 indicates economic contraction. So, we have Chinese Purchasing Managers Index is at 51.1 in July. That's the fifth straight month the gauge has been above the 50 line, separating expansion from contraction. The private Caxton Market PMI, this is a private measure, is even higher at 52.8. So China, if you remember, was quicker to recover from COVID and get its economy up and running again. And I would suggest to you that as the rest of the world tires of COVID or it starts to recede to the background and economic activity increases, the resumption of mining will have to take place. And I would also suggest that with all this money flow into the system, all this currency creation, all these currency units, money creation, and then the stimulus plans that I've already reported on from the EU, and I suspect is going to come from the U.S. after the election, it's more and more of a tailwind. And, let's not forget countries like India, okay? Let's not forget all of Africa. Let's not forget Indonesia. These countries are emerging markets, frontier markets. They are industrializing. They are urbanizing. That requires tremendous amounts of materials, specifically copper, specifically if you're going to have electricity. If somebody buys an air conditioner or a washing machine or a refrigerator, there's copper involved. If the villages are in India are electrified, that requires transformers and distribution points and substations. So what I'm trying to tell you is that long term I'm bullish. There's the stocks of many copper producers got decimated after the crash in March, back in February, late February, early March. We have one in the a pretty decent stock, copper stock, in the Actionable Intelligence Alert newsletter. Just to tease the newsletter for this month, as we get to the end of this video, I plan on including a stock in there that's going to have coverage for many different commodities and resources. I'm looking for to take advantage of what I think is going to be this upswing in inflation. this monetary creation that's going to lead to an overall lifting of prices in the resource and natural resource and commodity sector. And I think copper is going to be a big beneficiary of that for several reasons. Lower supply, higher demand, lack of investment, electric vehicles, renewables, and continued electrification and urbanization of frontier and emerging markets. I think a lot of things are lining up. It's a long list. It would take hours to talk about, but I think you're seeing the beginning of this. In the copper stocks, there's quite a few copper stocks out there that are selling for cheap, and a lot of the focus has been on gold, silver, and things like that, and copper has been just kind of sneaking along, making new highs, right? And this is definitely very positive. You're even above the highs of prior to the crash, even when the economy was doing very well before this happened, before the COVID crash, and it's just been a steady climb ever since. Not suggesting we're going to $4 or $5 a pound. I think that happens eventually, but I think that this is definitely something to keep on your radar, and I wanted to bring it to your attention. And again, please take a look at the interview with Dr. Michael Kelly. A very smart guy. He was very gracious to come on the show. He was at a prestigious university in the UK, Cambridge, and our discussion around engineering and 2 + 2 = 4 and not 5 was very interesting, and I think that you would find it interesting. So keep your eye on copper, and I'm going to be looking to add to in the portfolio. So that's it for this video, guys. We'll try to get another one out this weekend, hopefully. So until next time, take her easy.